Should I trade in cash market or futures market will be good, or should I try options? Many people have this confusion on which markets to trade because there are a lot of options available, and the retailers they get confused. And what capital is required to trade in futures or options? So these are all the queries which I'm going to answer in this video. So stay till the end. Hey, welcome to Trading Income, and let's begin this video. So first we'll see for the less capital. We have divided it into three categories. First is if your capital is less than 1 lakh. Your capital is less than 1 lakh. Then what should you do? What would be good for you? So then you should trade in cash market because that would be the best option. Because if you have less capital and if you enter into futures or options, then your position sizing will not be proper, your risk reward will not be proper, and that will lead to a big loss. Your risk management will not be proper. So the best option when your capital is small is to go in cash market. So the benefits of cash market are many. The first one is that even if you have say 1000 rupees, even if you have 1000 rupees, then also you can trade. Then also you can, this is the best way to practice actually. Even if you have 10 lakh capitals, more than that capital, then also I would recommend for a newcomer or a beginner to start with less capital. Just start with 10,000 rupees or 1000 rupees as per your wish and see how it works and practice it. You'll make mistakes, you'll make losses, you will blow your account. That will happen not only one times but many more times. The best thing will be that your capital is small, so your loss will be small. So suppose you brought 10,000 rupees of capital and you started with cash market and you made few mistakes, you made a big loss and all your capital is lost. But you will learn from your mistakes and your loss will only be 10,000 rupees. Whereas in another case, if you start with 10 lakh capital, you don't know anything, you have no knowledge about trading, and you start with 10 lakh capital and you make one big loss, you can lose all this 10 lakh capital. Now just compare the two cases. In first case, you lost just 10,000 rupees and the next one you lost 10 lakh rupees. Which is better? The first one is obviously better. So therefore, it's always recommended to start with small capital, even if you have large capital. This is just that you understand the basics, you get the basic knowledge, you get familiar with the markets, with trading, you know what is position sizing, you know what is risk management, you learn from your mistakes. So this is the benefit of trading in cash market. So this is always recommended. So now suppose, how can we trade with 10,000 rupees? We'll take an example. Sorry, 1,000 rupees. Now suppose you want to trade in SBI. The current price of SBI, it is trading around 190. So now you can trade one share in SBI just for practice. Like if you think that SBI can move up, you are bullish. So you can buy one share of SBI. You can put a stop loss of say 2 rupees and your target is of 4 rupees. So then also you can practice. See, you'll even if your target is that you are getting only 4 rupees, and that is not a big amount, that is a very small amount, but you have to remember one thing, that you are practicing, you're learning the basics, and this is the best way. Cash is the best way to practice. So this is recommended for beginners. So even if you have 1000 rupees capital, 10,000 rupees capital, 20,000, 50,000, up to 1 lakh, you can definitely start with cash market. And one more advantage of cash market is liquidity. It has no problem of liquidity. Any share you trade, F&O shares, it will not have liquidity problems. So these are the two benefits. First is the liquidity, and the next is the that you can practice with small capital, so that your risk will be less. Even if you blow up your account 2 to 3 times, your loss will not be big. So this is the thing. Now we'll move on to the next part. If your capital is greater than 1 lakh and less than 10 lakh. So now your capital is 1 lakh to 10 lakh. If it is between it, then also, you can trade in cash. See, the one more advantage of cash trading in cash is that you can scale up, you can scale down, and there is no fixed lot size available. If you're comfortable with 500 shares, you can trade with 500. If you're comfortable with 10,000 shares, you can still do that. So there is no problem on scaling in cash market. This is one more advantage. So even if with this capital also, you can trade in cash market. And now you have one more option, that you can trade in options as well. I've seen many people, many mentors, trading mentors, suggesting that first, after cash, you should start with futures and then we should move to options, because options are complicated. Futures are very simple. We buy, we sell, that's it. But in options, there is a lot more complexity than futures. But still, the reason to I prefer options over futures is that your risk will be less. Risk will be lesser in options than in futures. And so that's the main thing. In future, you suppose the lot size of SBI is 3,000. In futures, it is direct. If the stock moves in your direction, you will make profit. If stock moves against your direction, you will make loss. But in options, even if market goes against your direction, you can still survive. That's the main part, and that's beneficial about options. So I agree that it is a bit more complex to understand than futures, but still one should try to gain the proper knowledge, get the understanding of options, and can try options with this capital. And there are two types in options. There are two types. First is index. You can do index options, and second is stock options. So, I would prefer index options anytime, because index option, because of only one thing, which is liquidity, and liquidity matters. Index options has the best liquidity, so there is no problem. Means slippage will be very small. Slippage problem will be very small. Whereas in stock options, there is very less liquidity. There are only few stocks options which have high liquidity. Most of the stocks, they have very less liquidity and very high slippage cost is there. So therefore, if you want to trade in options, index options are the best. And one more advantage of index options is that index cannot move to zero suddenly. It cannot move to zero because it's an index. It's a combination of stocks. Where a stock can go to zero anytime. And in index, there is a circuit limit. If it gaps down, if it moves 10% in one direction, then the market will be closed for few minutes. So there is a limit for the down movement or the up movement in index. But for stocks can move down up to 70-80% in one day. This has happened many times. So this is one more advantage of trading in index options over stock options. So for 1 to 10 lakh capital, you can trade in cash or you can move to index options. So now moving to the third part, if your capital is greater than 10 lakh, then what can we do? If it is greater than 10 lakh, then still, if you are comfortable with cash, still you can do with cash, increasing your position size. Or you can do options, which is index options. And here you have the flexibility to enter into futures also. If you are comfortable with cash, you have got enough years of practice in cash market, then now you can move to the futures market, because futures market is the most riskiest market. So After 10 lakhs, you can go into futures also. But if I'm comfortable in cash, you can remain in cash. You're comfortable in options, you can remain there. So the main part here is which segment you are more comfortable. Find your comfort segment and be there, because my comfort segment may be different, your comfort segment can be different. So it depends on person to person. So these are the three categories. This is depending on the capital, how much capital you have and which markets you can trade. So now moving ahead, the most important thing in all the segments is position sizing. This is the most important thing. Even if you have 1000 rupees of capital, you can trade in cash market. But here also, if we can do position size properly, just I took one example of SBI, like it is trading at 190. I am keeping a stop loss of 2 points. My target is of 4 points. So my risk reward is proper 1:2. And even if I make a loss, even if my stop loss is hit, I will make 2 points loss. But if I make a profit, if my target is hit, I'm making 4 rupees. So risk reward should be proper. Your accuracy, you should know your accuracy, and this you can know after taking a few set of trades. Like you can take a set of trades of 20, and after that see how many trades went right, how many trades went wrong, what is your risk reward. So in this way you should journal your trades, and in this way you will learn where you are going wrong. So position sizing is important, whether you have 1000 rupees of capital or 10,000 rupees of capital or 10 lakhs of capital or 10 crores of capital. If you don't do position sizing well, you cannot manage your risk well. And if you don't manage your risk well, then your capital is at risk. See, in trading, risk is there. We take risk to get reward. And if we take high risk, we'll get high reward. If we take low risk, we'll get low reward. So this is the general thing here. So now we want high reward, but we don't want to take high risk. We want to take low risk. So low risk, high reward, that also we can do but for that we need experience. We need practice. We need patience. We need discipline. These are the various skills we need to search for this type of low risk, high reward trades. So friends, this was all about this video. And one more thing is, consider losses as your expenses in trading business. This will help you in accepting small losses. Consider losses as expenses in your trading business. This will help you in accepting small losses. So friends, this was all about the video, and we keep posting such type of informational videos on trading. And if you want to learn trading from us, you can consider joining our Telegram channel. The link is in the description box, where we can guide you more into how you can become profitable trader. So we keep posting this type of videos. You can consider liking this video, share it with your friends, and subscribe to our channel for being updated about our next videos. So see you in the next video, and wish you all profitable trading.